Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Tuesday, July the 14th. Well, straight away we can notice that the character of the market changed from the previous day. We have a very, very small body, and that's not what we like to see in a first time frame uptrend. We like to see the size of that body maintaining at a decent size. Now this tells us that for the day, the bulls have made very little net gain compared to the previous day's trading. So quite a large reduction in the power of the bulls. So it casts doubt about the strength of this trend or the ability of this trend to continue trending up. Although the final test of the trend is the configuration of the highs and the lows, and we still have a higher high and a higher low, which means that the trend is still up. Now interestingly though, even though we have a very small bodied candle and the range of the candle has also decreased, the range is the distance between the high and the low, and that's decreased quite dramatically as well. That actually tells us that the bulls are not as eager as they were. But even though that's happened, the bulls have still closed the market up at the high. So for the amount of trading that's occurred throughout the day, the bulls closed in the ascendancy. They closed in control and they showed commitment. Now, it means that the bears basically had no control throughout the day, so there was virtually no bearishness in this market. So quite a small amount when they pushed the market down to a low, but still the bulls have gained quite a very, very strong amount of control. So we need to take that into account when we're assessing what the candles are telling us. But still, the large reduction in the size of the body is really paramount to candlestick analysis. Now, it's little wonder that the size of the body has decreased because we're entering this area of resistance that we highlighted yesterday. We know that we can find resistance or support anywhere in the cloud, and we're approaching the top of the cloud, and we know that that will most likely act as an area of resistance. We've also traded up to the flat Tenkan-sen and Kijun-sen, and we know that the Kijun-sen, especially the Kijun-sen when it turns flat, is an attractive price action, and that's exactly what's going on here. So we need to look at how the market reacts when it moves to around those levels around the Tenkan-sen and the Kijun-sen. Now usually the Tenkan-sen will hold as an area of support or resistance when the market has very strong downside or upside momentum, and here the market didn't have that downside momentum. The market was flat because the Tenkan-sen is pointing sideways. So it's little wonder that we closed a decent way outside of the Tenkan-sen. So the next stop will be the Kijun-sen, and the Kijun-sen should generally hold within an area as an area of resistance in this case. So that will also coincide with the top of the cloud here, so we can see where the position of the Kijun-sen is in relation to the cloud. So what we need to do is watch how the market trades up around when it trades up to that area. If tomorrow's candle has a large spike, it can trade outside of that area. If it has a large tail or whatever on it, then that will be a sign that even though we've tried to trade outside that area, the bears have come back in and the bears are getting stronger and they're pushing the market down. We don't know how the market will trade until we actually see it though. But if we do have a bullish day, and we do trade outside the cloud, that will be fairly important for this market. Probability is against it, but it could happen. And if that does happen, we have these strong resistance areas up above where the market's held on a few occasions previously at 930 and 943. If we do have a change of trend or bearishness come in, then we'll probably see the market trade back down to this zone of resistance or to anywhere within the cloud, especially to the bottom of the cloud. That should act as an area of support. I may have said resistance, but this is support. So basically, once again, we have a range-bound market. Upper limits on this market, lower limits on this market. Not a market where we really want to be too keen about taking any major positions yet. Wait until all of this resolves itself. If the market is strong enough to close up above this zone of resistance, then 1,000 will be the next port of call. So we will be able to take some strong positions there. If we trade down below the cloud, then, well, it could be fairly negative, but we do have some decent swing lows on the way down. But it'll be a while before this market resolves itself.